Good morning, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. Today's date is April 13, 2023. This is the Morning Forex Technical Report, where I take a look at the technicals that are driving the currency market. So let's get started. We had PPI data come out weaker than expected at minus 0.5%. That they were expecting 0.0%. The core measure came in also negative at minus 0.1% versus 0.3% expected. So year on year for the headline PPI is now at 2.7%, below the 3% level, moving toward the 2% target for inflation, basically. But it is of course, the CPI data that the market is more focused on, and so is the Fed, and that still remains well higher at 5%. But expectations are that may come down, and we have the input cost for producers moving lower. That is a good news for the trend in CPI to continue in the downward direction, although oil prices still remain a concern. So we have lots of balls in play here, but the data today was more constructive for inflation moving lower. U.S. initial jobless claims also showed weakness in the labor market. Recall from last week, the the Department of Labor lower increased the changed the seasonals that caused the initial jobless claims to move to the upside above the 200,000 level, which it had been below for most of 2023. Now moving toward 240,000, which is a significant change. Also, the trend has been moving to the upside since February, which is a big difference, and so helps to support the idea that companies are indeed laying off workers, and that is showing it in that data. So we have weaker data and slower inflation, which is somewhat good news for stocks, I guess, although there's always concern about a recession and lower earnings going forward. So who knows about that? But we are seeing the dollar move lower, and so let's get into that and take a look at the euro versus US dollar. The price today has moved above the high price for the year. That high price came in the beginning of February at 1.10317. You can see returning above that level, currently at 1.1050. So we're moving to new session highs, and highest levels going back to over a year ago, back in early April of last year. So it's been a new 12-month high here in the euro versus US dollar. On the top side, this area right through here near 110.316 or 111.316 is the next major target. So still around 80 pips away from that level. But as long as the price can remain above 110.317 in the short term, that would keep the buyers firmly in control. There are other levels that the market can move down to and still maintain its bullish bias. So let's take a look at some of those ideas. And if we take a look at the this is a 4-hour chart, we can see that the low price that we saw on trading here today stalled against the high price that we saw last week, 109.728. So we'd have to move below that level to increase the bearish bias as well for the euro versus US dollar. Absent that, and probably the buyers are still more in control. Of interest this week is that the low price this week stalled against the 100 bar moving average on the 4-hour chart right here, and found buyers to the upside. And earlier today, the price high did come up and test the high price that we saw in February, and found willing sellers on the first look. Can't see it on the 4-hour chart. You can see it on the but the price has since moved to the upside as a result of the weaker data, weaker PPI, weaker initial jobless claims, which pushed the euro to the upside and the US dollar to the downside. So buyers are taking control here. Stay above the 31 level is certainly the buyers are firmly in control. If we move below that level, we could see a price rotation back toward the 109.728, but it would take a move below that level to increase the bearish bias, in my view, for this currency pair going forward. Let's take a look at the dollar versus yen next, and if we look at that from an hourly perspective, the market has moved down now and is testing, as we speak, the 200-hour moving average at 132.50, trading just below that level. So looking to break to the downside potentially, or find support against this level. key level right here for the dollar versus yen. We did move in trading yesterday. We moved down, tested the 100-hour moving average. That's the blue line in this chart. Also tested the 38.2% retracement of the move up from this low to this high right here. So a dual level of support right here helped push the price back up toward this blue line, which is the 100-day moving average. And as you can see, the price moved above that moving average on here, and here right before the data this morning, but has since rotated to the downside and moved away from that level. So those attempts above the 100-day moving average all failed, and the market is moving not only away from the 100-hour moving average, but also now breaking below the 200-hour moving average, looking toward the 50% retracement at 132.31, and then this swing area down here between 132.19 and 132.27. Those are the targets for the euro dollar versus yen. Let's take a look at the sterling versus US dollar, and like the euro versus US dollar, we're trading to new highs. Taking a look at the daily chart here, we're getting above the early April high, which came in at 125.246. Currently trading 125.316. So breaking out to the top side here. In addition to that, on the daily chart, we did move back above this swing area defined by a bunch of different swing lows and highs, going back in time here, where the and then swing highs here. We tried to hold it there at the end of the last month, trading below it and trading this month. But as you can see, we're breaking to the upside and breaking above the high price from earlier this month, and looking toward this swing area up here between 125.98 and 126.653. That area is defined by these swing levels through here, which formed this ceiling before the market moved to the downside. So the sterling versus US dollar, like the euro versus US dollar, is breaking to the upside in trading here today, trading at the highest level going back to this is June of 2022, so not quite a year ago like the euro versus US dollar, but still fairly long while ago for the sterling versus US dollar. Finally, I want to take a look at the dollar versus Canada. And you can see here the dollar move to the downside has taken the price below the 200-day moving average. That comes in at 133.938. Let's take a look at the daily chart to see what that looks like. The price is not traded below the 200-day moving average since this day right here, where the market failed and then reestablished support against the moving average the very next day. That is key, and that's going to be key right here as the market makes a break to the downside below the 200-day moving average. Can the price stay below the 200-day moving average today, tomorrow, and push further to the downside toward the 38.2% retracement of the move up from this low to, well, it's not really a good level, but let's reset that a little bit. Let's put this up here. That's more like it. That's how you figure those things out. We are below the 38.2% retracement, so it looks like on the daily chart, the next real targets come down here near the 132.98 to 133.20 level. That's about 60 pips away from the high of that area. That's where the traders will be looking toward. Now that we've broken below the 200-day moving average, stay below that level, keeps the bears more in control. So there you have it. A look at some of the major currency pairs. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.